Hello and welcome to Siebel Volatility 411. My name is Dan Deming and I'm a KKM Financial. Well, we're seeing the VIX cash under pressure as the SPX continues to rally. Positive reaction to the non-farm payroll number. SPX about 9 points away from an all-time high, so a closing high that would be. So we're continuing to see upward momentum. And the VIX cash under pressure, 16.5. And when you look at realized volatility, I tell you, it continues to decline. 10-day realized volatility week over week down to 7.5%. 30-day realized volatility down to 12.5%. And that's having a significant impact, I believe, on the futures market. Now, we're seeing, again, we got through the non-farm payroll threshold, but the VIX futures, the June contract at a contract low of trading at 18 currently. And we're seeing that roll market between June and July widening out by 25 cents today so far, out to $2.35. The entire futures curve is shifting lower, and it's also steepening. So we're seeing all the futures lower here midday, and the back month futures down less than the front month futures, and therefore we're seeing a steepening of the curve. Looking at the money straddle in the SPX, 12.5%, so it continues to be a compressed nature there, as we're not seeing a lot of realized volatility. The skew, though, is interesting. The SPX skew factor is down, actually. We did see a high of 155 last Friday, which was the high for the year. Now 145, still elevated, still demand for those way out of the money puts, but has come in here the last couple of days. Looking at VVIX, measure implied volatility in the VIX options, 107. Holding pretty steady here around this range as we continue to see pretty steady demand. Now, it's interesting, though, it appears to be demand for out-of-the-money puts, as we're seeing big activity in the 16 through 19 lines in both June and July puts. And we're seeing some out-of-the-money calls, or way out-of-the-money calls, above the 35 strike active in both June, July, and August today. Looking at next week, I want to point out we continue to see this market pushing higher, so I think the market's going to be focused certainly on a couple of things. Number one, the infrastructure spending as that works its way through Congress, I think that could have an impact on the market as it digests that. Couple that with the data points highlighted by CPI and the potential for markets to be at new all-time highs.